Hello and welcome to ET Energy World. My name is Mohammad Bilal and you are listening to ET Energy World's Energy podcast, where we discuss the most impactful stories of the week. Today we start with the story of drastic fall of oil prices in the US. Now here we will be tracing those crucial 20 minutes that led to a dramatic fall in West Texas Intermediate and what happened in those 20 minutes that led to the price going negative to minus $37.25 a barrel. The coronavirus pandemic has hit economies all over the world. The demand for oil plummeted severely as economies all over the world went for almost complete lockdowns to fight the pandemic. This hit the oil industry badly to a buildup of inventories in surplus all over the world. The beginning of April 20th morning, it was evident that the oil market was heading for a collapse. Sell orders were pouring in and traders had a slight idea of what was in the store. They had estimated in advance that the prices would take a huge drop. Now, by 7 a.m. in New York, the price of a Q futures contract, West Texas Intermediate for the May delivery was already down by 28%, bringing the price to $13.07 a barrel. The traders at NYMEX platform in New York closely watched oil prices coming down to $11 a barrel at 10 a.m. Within a few hours, this rout deepened as oil price set new low in rapid successions, which led to the oil price coming to the lowest ever since the Asian financial crisis of 1990s. The lowest since the oil crisis of 1970s, when the oil for the first time came below zero. The inevitable had happened. Now, within 20 minutes, the most extraordinary thing that had happened as the world's most important commodity, oil, closed the trading at minus $37.63 a barrel. Saudi princes, Russian and Texas wildcatters watched to their horror the most unprecedented development in the history of oil market. Now, oil had fallen negative. Next in the podcast, we talk about a big development this week of the American global firm KKR buying 5 solar assets from Shapoorji Pallonji Group for $200 million. Now, after months of negotiations, the deal is finally struck. SP is one of the topmost firms for renewable energy projects in India. SP Group watchers cite these divestment deals as part of a strategy that seeks to strengthen the company's ground, deploy more capital and equity to develop greenfield assets. But the company has been grappling with some loan issues as it has sought an extension to repay an interim loan of 2,341 crores to EPC arm Sterling and Wilson Solar. Now, the last story of today's podcast is of the Indian Gas Exchange planning to launch natural gas trading on electronic platforms from next month. The company was due to launch the service in early March, but the lockdown due to coronavirus led to the delay. This would be the first online trading of natural gas in India. Initially, the company has identified Dahej, Hazira and Kakinada as delivery points and will be subsequently including Dabhol, Kochi, Ennore and Mundra terminals. According to Rajesh Mediratta, who is the director at IEX, all trades which will take place on the platform will be for physical delivery and will be non-transferable. DK Saraf, chairman of Petroleum and Natural Gas and Regulatory Board, has said that this would lead to price discovery, making natural gas trading more transparent, and the market would become efficient and demand would help in shaping the market. So, this is all we have in today's episode of podcast. Keep listening to this space for more. Thank you.